Are reverse mortgages a financial lifeline or one of the biggest mistakes retirees can make? Depending on who you ask, you'll hear completely different answers. Some people use reverse mortgages to eliminate their monthly mortgage payment, improve their cash flow, and stay in the home they love, and others worry about fees, shrinking equity, and what happens to their heirs. So what's the truth? I'm Trevor Gravink, a mortgage consultant and real estate broker, and in this video I'm going to break down the real pros and cons of reverse mortgages without the sales pitch, so you can decide whether this strategy makes sense for you or someone you care about. So let's dive in. Before we go any further, I just want to simplify this, because if you don't understand how this works at a basic level, everything else can get really confusing. So let's just break it down really simply what a reverse mortgage is. So put simply, a reverse mortgage is a way for homeowners typically 62 or older for FHA products and 55 or older for some proprietary options to access equity in their home without having to sell it or make a monthly mortgage payment. Instead of making payments to the lender's giving you access to your equity. Now that can come as cash, a line of credit, monthly income, or a combination of all of those. Now the important part is you still own the home, you stay on title, and you're responsible for the taxes, insurance, and maintenance. And the loan is repaid later when you sell the home, move out, or pass away. So at its core, this is just a way to turn your home equity into usable money while you're continuing to live in the home. What makes this different really comes down to one simple idea and direction. With a traditional mortgage, your loan balance goes down over time as you make payments. With a reverse mortgage, it just works in the opposite way. Because you're accessing your equity, instead over time the loan balance can increase. And that's not because something is going wrong, it's simply because you're using your home equity while you live in the home. So instead of slowly paying your house off, you're strategically turning that equity into cash. So the real question isn't whether it's a good or a bad thing, it's when does that actually make sense for someone. Here are some of the major pros or benefits to a reverse mortgage. First, there's no required monthly mortgage payments. As long as you continue to pay your property taxes, homeowners insurance, and maintain the home, you can remain in the property. Second, reverse mortgages are non-recourse loans, which means neither you or your heirs will ever owe more than the home is worth when the loan comes due. And third, the proceeds you receive from a reverse mortgage are generally considered loan proceeds, so they're not taxable income. Of course, you should always consult your tax advisor regarding specific situations. Another major benefit is that you can remain in your home while accessing a portion of your home equity. For many retirees, this provides financial flexibility without having to sell. And finally, reverse mortgages offer flexible payout options. You can receive the funds as a lump sum, monthly payments, a line of credit, or even a combination of all of those, depending on the program. Now, reverse mortgages aren't for everyone, but for homeowners aged 55 and older, they can be an excellent tool to improve cash flow and supplement retirement income. Let's go over some of the common drawbacks or cons of reverse mortgages. First of all, reverse mortgages often come with higher upfront costs than traditional loans. Depending on the program, there may be origination fees, mortgage insurance premium, appraisal fees, and other closing costs. It's important to understand the total cost before deciding if it's the right fit. Second, there is a limit to how much equity you can access. The amount available depends on factors like your age, the home's value, current interest rates, and any existing mortgage balance. You typically will only be able to borrow a portion of your home's equity. Another thing to consider is that the loan balance grows over time. Because there's no required monthly mortgage payments, the interest and the fees are generally added to the loan balance. That means the equity in the home may decrease over the years. But again, in a lot of cases, properties have increased over time, so sometimes that can balance out. You just have to think about the pros and cons of that. So here are a few situations where reverse mortgages can actually make a lot of sense. First, if you don't plan to move. This is really a long-term strategy, and the longer that you stay in the home, the more benefits tend to outweigh the costs. Second, if your retirement income isn't quite enough, this is where a reverse mortgage can really help. It can supplement your income, eliminate a mortgage payment, or just give you more breathing room month to month. Third, your health can play a role. If someone's dealing with health issues or just wants to make sure they can stay in their home comfortably, this can provide access to funds for care, home modifications, or just added financial flexibility. And fourth, if a lot of your retirement income is taxable, pulling money out of things like IRAs or 401ks can create a tax burden, but reverse mortgage proceeds are generally not taxable, so it can be a more efficient way to access your cash. Now, none of these on their own automatically means it's the right move, but if you find yourself checking a few of these boxes, it's definitely worth taking a closer look at how this could fit into your overall financial plan. Now let's flip it because there's absolutely situations where reverse mortgages do not make any sense. First, if you plan to move in the near future. This is designed to be a long-term solution, and the upfront costs mean it usually doesn't make any sense for short stays. Second, if your primary goal is to pass your home to your heirs with as much equity as possible because the loan balance can grow over time, it may reduce the equity left in the home. And third, if you're not comfortable with how the loan works, you should fully understand it and feel confident. It's not something you want to be unsure about. And fourth, and this one is critical, if you can't comfortably keep up with the property taxes, insurance, and maintenance. Even though there's no mortgage payment, those obligations don't go away. So this isn't about pushing a product, it's about making sure it actually works for your situation. All right, so if you're wondering what you might actually qualify for, it's a pretty straightforward process, but there are a few key things we need. First is your date of birth, and if you're married, your spouse's date of birth as well. Age is one of the biggest factors in how much you can access. Second is the property itself, specifically the address, so we can estimate the value. The more equity you have, the more options you'll typically have. Then we look at any existing loans, your first mortgage balance, and if you have one, your second mortgage or a HELOC. That helps us determine how much equity is available after you pay those off. Once we have those pieces of information, we can run a pretty accurate estimate and show you exactly what your options look like, how much you could have access to, and how it could be structured. So it's not a long, complicated process. It's really just about plugging in a few key details and then building it around your situation. Once I have your information, what I'm able to do is lay out multiple options side by side so you can actually see how this works in real numbers and not just in theory. What I'll do is I'll show you exactly how much you qualify for and then break it down based on how you choose to receive the funds. If you want to go with a lump sum, you'll see the maximum cash you can take upfront at closing. This is usually the best option if you're looking to pay off an existing mortgage or need a large amount of cash right away. If you choose a line of credit, I'll show you how much is available to you, how it grows over time, and how you can tap into it whenever you need it. This option tends to give you the most flexibility and long-term access to equity. And then with tenured or monthly payments, I can show you exactly what it looks like, how much you receive each month for as long as you live in the home, almost like creating your own supplemental income stream. The key is that you're not locked into just one structure. We can actually customize a combination of those depending on your goals. For example, some clients take a portion of a lump sum and keep the rest of a line of credit or a monthly income. My job is just to simply walk you through each option clearly so you can see what you get in each scenario and choose what makes most sense based on your situation and your goals. Before you make any kind of big decision like this, I think it's really important you know who you're actually working with. What you see behind me are real reviews from clients I've helped, people who are in very similar situations trying to figure out what the right move was for them. And if you look at what they're saying, it's not just about getting a loan done. It's about clarity, communication, and actually understanding their options. That's the part most people don't get from a typical lender. My approach is simple. I'm going to walk you through everything, show you the real numbers, and make sure you fully understand what you're doing before you make any decisions. No pressure and no confusion. Because at the end of the day, this only works if it makes sense for you. And my job is to help you figure out that in the right way, and also discuss this with anybody else in your family or any other decision makers that normally help you. All right, so if you have questions or you just want to see what this could look like for your situation, the next step is super simple. You can reach out to me directly. I'd be happy to walk you through everything, run the numbers, and give you a clear picture of what your options are with absolutely no pressure. You can email me, call me, or text me. Even if you're in the early stages and not sure this is the right fit, that's totally fine, and that's what this is for. Sometimes a quick conversation is all it takes to figure out whether this makes sense at all. Either way, I'm here to help you make the right decision. No pressure, no commitment, just clarity. And once you do decide that potentially this is right for you, then after our conversation, what we actually do is you have to go through actual counseling where you talk to a third-party person who has no equity or benefit from if you do this or not, so then they can make sure that you fully understand it. So you get two different perspectives of one, does this even make sense for you? I provide you the numbers, you take it to the counseling person, they do a one-on-one with you over the phone or like through a Zoom, takes only about an hour. They explain it all, make sure that all of your questions are answered. And then if you still want to move forward, they provide you with a certificate so we can take it to the next step. The whole entire idea is to make sure that you fully understand all of your obligations, what you can get, and make sure that everybody in your family also knows at the end of the day that this is a great decision for you short term and for them long term.